Hi there. According to Dataroma, Warren Buffett has sold StoneCo. As you can see here, he has sold 100% of StoneCo. Now, when you look at the stock price, year to date is down 6%. Of course, if you look at the entire picture, from the highest peak, the stock price is down over 82%. So the question is, should you also sell StoneCo as Warren Buffett did? Well, the answer is, it depends. Warren, or maybe his managers, sold this company because of different reasons. Not because the stock price is overvalued. Because as you can see, back in 2019, the stock price was traded around $47 and now is about $16. So from the current level, we may also have a double, or even more if they keep growing. Now, to come back to Warren Buffett or other great investors, you don't have to follow what they do. Because an investor buy a stock because it's a great company, it's undervalued, and that's a good sign. You can do the same thing only if you understand that company, but if you don't understand that company, don't track their investments. Don't do the same thing. And when an investor sells a company, he has more reasons to do so. Because he may need that money to invest in other cheaper companies, or he considers that the business model has deteriorated, or maybe other reasons. There are a lot of reasons why investors sell a stock. That's why you don't have to follow what great investors do. You can take a look, see if you can understand that business, and then you can decide based on your own estimates if the stock price is overvalued or undervalued. And if you find out that the stock price is undervalued, you can take advantage. You don't have to follow the crowd or other investors. And when it's overvalued, you can sell the stock. Now, let's look at StoneCo. If it's overvalued or undervalued. Because if you look at the latest report, you can see that the revenue year over year has increased by 25%. And that's quite great. Also, the adjusted net income has quadrupled, a 4x year over year, and that's quite great. If they keep growing in this way, they report higher and higher earnings, then the stock price may be cheap at the current level, and you can also see a double from $16 to $30 or even more. That can happen if they keep growing. You can also look at their segments. Their financial services, the revenue has increased by 29% quarter over quarter. Also their adjusted earnings before taxes. Also their clients has increased by 41%, active payments clients. So that's great. As long as they attract more customers into their network, they'll do great over time. Plus, you can also see the total payment volume has increased by 19%, almost 20% quarter over quarter, and that's great because the higher the total payment volume is, the more money they make. You can see on the right side their take rate, which is about 2%. So when their total payment volume goes up, they are able to charge about 2% of that volume. So the more volume they have, the more money they make, even though they don't increase their take rate. It might go down a little to 2% or 1%. But still, if their total payment volume keeps growing at a higher rate, then StoneCo will make more profits in the future. And that's great, because if they report higher earnings in the future, also the stock price will go up quite a lot. That's why you see this huge increase in just a few months, over 80%. So focus on their fundamentals. Don't follow what other investors do. Because maybe Warren sold StoneCo due to different reasons. Maybe he has other ideas. better than StoneCo. So, let's come back. You can also look at their key accounts, where the total payment volume has decreased by 22%. However, this volume is about 14 billion. So it was around 18 billion in Q3 2022. But if you look at the total payment volume, the entire pie, you can see that it doesn't represent a big part of their business, but only of around 15%. So they have almost 90 billion for medium and small businesses, and for the key accounts, they have about 15 billion. And their take rate is lower compared to medium and small businesses. So overall, they're still doing great. Now, you can also look at their banking system, as their clients, active clients, have increased quarter over quarter by 3.4x, and that's quite a lot. Also, their deposits has increased by 51%. So this growth rate in their active clients is backed by deposits, which are around 4.5 billion. And that's great. As long as they keep attracting more clients to their banking system and their deposits go up, they'll be able to make more money from credits and also other financial services. And that's great, because you can also see that they are focusing on credit, to offer credit to their consumers. And you can see their credit portfolio has increased by 6x. Of course, they also tried to do this in the past, but because they didn't handle the risk quite well, they lost some money. And that's why the stock price has declined so much, over 80%. They took more risk, they reported higher losses, and their credit portfolio went down. But now they are trying again. And this time they have some experience and they are focusing more on the risk than to grow their credit portfolio. And that's great. Plus, they also have a software segment which keeps growing a little by almost 6% year over year, and that's great. And the most important indicator for this company is their net income. Year over year, they had a growth rate over 100%. So their net income has increased from almost 200 million to over 400 million, a growth rate of about 108.7%. That's amazing. You can also look at the previous quarter, when their net income was around 307 million. So you can see their past performance. The previous quarter, Q1 2023, 200 million, Q4 2022, 78 million, Q3 2022, almost 200 million. So as you can see, the business has rebounded, they keep growing, and the stock price has increased by over 80%. But of course, as Warren sold this company, the market assumes that StoneCo doesn't do that great. That's why the stock price has declined by 9%. However, this is a small decline. What matters is their business, if they can keep growing more in the future. Because if they do, then the stock price can easily double from this level. The market cap can go to 10 billion, and now is around 5 billion. Now, as I said, to assess if StoneCo is a great buy at the current level, you have to calculate their fair value. And this depends. You can look at the analyst estimates, what the market expects, and try to estimate their fair value. So, if you look at the gray scenario, you can see that StoneCo is a little bit undervalued. The fair value may be around 7 billion or 7.5 billion, and now the market cap is around 5 billion. But be aware, this fair value of around 7.5 billion is for a 10% annual return. So if you buy the stock around $26, you still have a 10% annual return, and that's great. And now the market cap, as you can see, is about 5 billion and the stock price around $16. So you still have an upside. The stock price can go to $26 or even more if StoneCo keeps improving their earnings, their net income. If they report the same growth rate of 100% in the next years, then this valuation is quite low. The market cap can go to 10 billion or 15 billion or even more. So this can happen. But be aware, this is the gray scenario. There is also risk. If StoneCo doesn't grow more in the future, they report a decline in their earnings because maybe they're not able to handle their credit portfolio, they make the same mistakes again, then the stock price may go down if the earnings decrease. So you also have to be aware of the risk that the market cap may go to of about 2.5 billion. And at that level, your return may be around 10% if you buy the stock around $8. So you can have a decline of 50% from the current level only if StoneCo reports lower earnings than expected. That may happen. That's why you have to be aware of the risk. By the way, if you remember my videos, I also made some videos in the past when I said that StoneCo was a good buy. But back then the market cap was around 2.5 billion. And that's why I said that the stock price is undervalued. You may double your money. And as you can see, that happened. An increase over 80%. So that's great. But now you have to be aware of the risk because now your margin of safety is not that high. You can still have a decline of 50% from the current level. In the normal case, the market cap, the fair value of this business, StoneCo, may be around 3.7 billion or 4 billion for a 10% annual return. And at the current level, the current stock price of $16, it seems a little bit overvalued. You have a higher risk than it was in 2023 when the stock price was around $10. But as I said, if StoneCo keeps growing, they improve their credit portfolio, they attract more customers to their banking system, and they report higher earnings in the future, more than 400 million per quarter, then this valuation may be quite low, too conservative, and the fair value may be even higher. As I said, the fair value per share may be around $40. That can also happen. So it's up to you. If you want to sell at the current level, you can do it. You take a profit if you bought when the stock price was low, or when I said that the stock price was low, was a bargain. But now, if you want to invest in this company, you have to be aware of the risk that you no longer have a margin of safety. So see how this company fits you. How is your style of investing? If you want to take more risk or to have a margin of safety. So if you have other questions about this business, please let me know in the comments.